Well, hello everyone, and welcome to Technology Tuesday presented by Out of the Box Technology. We're so glad that you joined us today on this Tuesday morning or afternoon, depending on where you are listening in from today. And those of you watching on demand, we're so glad that you took some time to watch this recorded webinar. My name is Jennifer, and I will be your moderator today. For those of you on the line, if you have any questions as we go through today's presentation or just need some clarification on anything, if you can't hear me or see what's on the screen, go ahead and use that chat feature on your GoToWebinar control panel, and I'll be happy to assist you, and then we'll have some time at the end for some questions for our presenter today. So go ahead and put your questions in the chat. We'll also just have some interactive conversation going on, so you can use the chat for that function. A little bit about Out of the Box Technology. If you haven't joined us for a webinar recently, or maybe this is your first time, I would like to welcome you. Out of the Box Technology is anything and everything QuickBooks. We have a great team of consultants that do QuickBooks training, integration, and support across all versions of the QuickBooks family of products. We do bookkeeping services, data migrations, and more. And today's webinar is falling into that and more category. We have many partners within the industry, one of which is Avalara. We love working with them. They are just really the standout in the field as it relates to sales tax. And so I'm excited to have Matt Hammond from Avalara on with us today. But before we dive into that, I just wanted to do a couple of housekeeping items. Today's session is approved for continuing education credit. So if you are watching live, that is going to apply to you. So stick with us through the session. Chat in some questions. If we have any interactive questions out for the audience, go ahead and use the chat for your answers, and you will receive 1 CBE credit for today's session. So what are we talking about today? As I mentioned, we have Avalara with us, and I love this title, Win with Tech. I think it's great. Obviously, we are out of the box technology, so that is part of our goal as well. So Matt, I'm excited to hear what you have to talk to us today about mastering the basics of sales tax. And before I hand it over to you, I know we have some learning objectives today. So I'll put those up on the screen for everyone to just glance over, kind of get a snapshot of what Matt is going to discuss. And as I said, we're just really excited to have everyone on the line today. I know there's a lot of people from our organization and the industry in general. So Matt, with that, I'm going to hand things over to you and let you take it away.
All right, perfect. Thanks, Jennifer. And let me just get my screen queued up here. All right, and you should be able to see everything. Are we okay from my viewpoint?
Yes, it looks great. Thank you.
Perfect. Awesome. Well, look, Technology Tuesday is very important, and I think, before we get into everything, and we'll walk through the agenda in a second, Jennifer, you hit it right on the head, right? Now's the time to leverage the technologies out there to automate processes that typically, multiple humans or multiple people have had to do. It's just the era that we're in now and where we're trending. So it's one of those things where it's really important. And I think, the sales tax piece that we'll talk about today, it really is one of the number one things people want to automate. You talk about payroll, inventory, stuff like that. Sales tax is right up there with it where it makes sense to automate. So I've been at Avalara a little over 6 years. I've been talking about sales tax almost every day. It even comes up on Saturday. How? I don't know. I was at my pool last weekend and somebody was talking about a sales tax thing for their business. I was like, well, this is the conversation I'm meant to be in. But what we're going to talk about on the call today is just, first and foremost, why sales tax is important. How do states rely on it? And then we'll dive into, truly the basics. Where do you need to collect sales tax? Do you have Nexus in that state? We'll walk through some of the industries that have compliance risks, as well as how important it is for those states and what states specifically rely heavily on from a sales tax standpoint. And then also the 5 W's for sales tax automation, and then we'll walk through next steps and truly how we can help. And I like to phrase it where we can help as much or as little as you need, but first and foremost, it's getting a better understanding on why sales tax is important and why does it matter for your business. And before we get into it, I'll start with one of the blanket statements I usually use. It's one of the highest sources of revenue for the states. It's one of the highest sources of revenue for states as it relates to, on an annual basis and revenue that they're bringing in. So really cool statistic here. 27 states receive the majority of their annual revenue from sales and excise taxes. 27. Now there's obviously 45 states plus DC that collect sales tax, and 27 of them, it's one of the biggest piece of revenue. And sales tax is, honestly, it's a pass-through expense. A lot of companies, and we'll talk about Wayfair and Economic Nexus shortly, they're having to get registered in states solely due to Economic Nexus. So that's one of the things that we have to think about. But sellers collect directly from the consumers and they give it back to the states. That's really what sales tax is. It's not something you ever own. It's not something you get to keep, unfortunately. And you can see here, general sales, 24%. So it's very important, and it's something that has to be done right. And we're seeing, with a lot of the pitfalls of 2020, we're seeing states get more aggressive when it comes to sales tax collection and sales tax revenues. I mean, and look just here from the deficit in 2021, almost $290 billion deficit. That's wild. California's raising taxes and tax rates. They have a $54 billion deficit. So 2020 impacted it in an immense fashion, and now's the time where we have to take that proactive approach. And if I'm a business owner, a controller, a CFO, I'm looking for things to automate, and that's really ties right into Technology Tuesday and what technologies are out there that you can leverage for your business. And we'll talk about Avalara and how we can automate the sales tax component of your business throughout the webinar today. Now, a lot of businesses over the course of the last 2 years had to shut down their doors, primarily some brick and mortar locations. And a lot of them actually turned into an e-commerce model, which they hadn't done before. But, the states are focusing on getting those losses back. I mean, the states are businesses, if you think about it at the end of the day, right? They're increasing their rates. They're taxing things that weren't taxed before. The third bullet point here, which is interesting, taxing digital goods and services. The state of Maryland on March 14th of 2021 decided to start taxing digital services in the middle of the month, and it took effect the very next day. Now that's just one of those things where some companies may have not had to get registered in that state because it wasn't taxable, or they never had to charge tax, and both those things changed overnight. So we're seeing a very, very high crackdown on the Economic Nexus laws. They're trying to make sure companies that should be registered are registered, and they're developing more resources and hiring people to handle audits because they know that a lot of companies are out of compliance. And we'll talk about what does it mean to be in compliance over the course of the next 45 minutes. Now, everything starts with Sales Tax Nexus. Now, I hope there's a couple people on the call today that have never heard of the term Nexus. You will hear me say it probably 175 times in the next 45 minutes. Nexus, Sales Tax Nexus. Now, what does it mean? Sales Tax Nexus means you've established some sort of physical presence or a connection to a state that requires you to get registered to collect and remit sales tax. Now, we have a slide here in a minute that'll give you some great examples. Now, there's a couple different types of Nexus. There's traditional Nexus, like a physical presence in a state. If you have inventory, boots on the ground, you need to get registered. And then we'll talk about Economic Nexus as well, because we're about 3 years post this Supreme Court decision, which we'll highlight, that is impacting a lot of businesses moving forward. But again, Sales Tax Nexus means you have a connection to a state, and you want to think about the states that you're not located in. So take your home office, and you want to see if you believe you have an obligation to collect tax there. Now, we talked about a couple different types of Nexus. The two most prominent ones are, number one, physical Nexus. So you have an office, you have employees, you have a warehouse, you have inventory in the state. That's what we would consider traditional physical presence Nexus. Then we also have Economic Nexus. That came about 3 years ago. That means if you sell a certain amount into a state, you now have to get registered. You don't have to have any employees. So think about states you never go to, but you ship a product via common carrier. If you hit a certain threshold, and we'll cover those on the webinar today, you potentially have to get registered in those states. And then there's also Click-Through Nexus, Affiliate Nexus, and Marketplace. The first two are the most prominent, and that's really what we're going to focus on today. Because again, we want to help you understand the basic functions as it relates to sales tax and compliance. So here's what I like to do. Take a lean back, and then look at your company that you work for or one of your clients that you do business for. Identify the state that they're located in. So let's just say North Carolina, where I am. If I have any of these activities outside of the state of North Carolina, I should be collecting tax in those states. So if I have inventory, if I have remote sales representatives, if I have contractors, 1099 employees, if I go to trade shows, if I cross state lines to solicit or conduct business, these are what we consider the top nexus building activities. So if you have any of these outside of the state you're located in, odds are you probably need to be registered to collect, file, and remit sales tax. Now, I usually preface with, and Jennifer's heard this line from me before, I'm not a CPA or a tax attorney, right? I can't give you legal advice, but I have been talking about this for over 6 years. I am extremely versed in the space. And I've worked with hundreds and hundreds of companies every month to sign up to leverage our automated software, okay? But again, anything on the screen that you have outside of your home state, odds are you need to be collecting or remitting sales tax in that particular state. So what changed? This is what I get all the time. Matt, what's different? I'm getting letters from states. I'm being told, in one of my platforms that I've crossed Economic Nexus and I hit 7 thresholds. So if we rewind the clock 3 years ago, and we just passed this, we're in September, but on June 21st in 2018, the Supreme Court ruled in favor of South Dakota, and what they said was, you no longer have to have a physical presence to have to get registered to collect or remit sales tax in the state. The way they deemed it was the way people buy and sell products or go to market today is vastly different from 20 years ago. So they changed the rules. They changed the rules at the Supreme Court level, and they said each state can come up with their own thresholds, and if a out-of-state seller sells enough in that state or ships enough product, they now have to get registered for sales tax. And what does that mean? So what that means is, as the seller, you no longer control what states you collect tax in. And that's it's kind of scary statement, but let me tell you what I mean by that. If I buy enough of your product, or if you ship enough product to a state that you never go to, you're going to have to get registered. You're going to have to start filing a sales tax return. You're going to start charging sales tax on your website, or if you invoice out of QuickBooks. Moving forward, it's a future forward state. Now, we're 3 years since this happened. And we're seeing a lot of companies going, oh my gosh, I should have done something a month ago, 2 months ago, 2 years ago. I realize now we got to get registered in 30 states. We're in the era where you have to be proactive as it relates to sales tax and compliance. Because like we talked about in the beginning of the webinar today, there's a huge push for sales tax. It's one of the highest sources of revenue for the states. When the states are behind, they're going to lean on some of their high priorities to get people to get registered moving forward. And then again, 44 of the 45 states have adopted Economic Nexus, and actually I think 45 of 45. Florida and Missouri just put their thresholds in place. So what does this mean for your business? When we look at the map, you can see here, most states, it's $100,000 or 200 individual transactions. The exceptions, California and Texas have high thresholds. Connecticut, 250,000. Georgia, 100,000 and 200 individual transactions. Alabama, $250,000 in sales. And here's one of the questions I get all the time. What about if this what we sell is exempt? In certain states, and you can see California, Texas, Alabama, the exempt sales matter. So you may be selling something that's exempt, but shipping might be taxable. you would have to charge tax and then file a sales tax return for shipping if it is taxable in one of those states. So you have to be thinking about that as you're looking and understanding Economic Nexus for the first time. We have a great risk assessment tool on our website. If you go to avalara.com and type in risk assessment, you can answer some questions about your sales, and it will compute a report and give you at a high level, kind of like a homework checker, which states you should collect tax in. But again, most states it's $100,000 or more, and then also 200 individual transactions. So this is what it looks like from a Economic Nexus viewpoint across the country as it stands today. And you can see the nomad states, Montana, Alaska, Delaware, Oregon, they don't have sales tax, so you don't have to worry about those as well. Now, this is another common question we get or request, on a daily, weekly basis is what industries, what companies have the highest risk for sales tax? So let's think about this. Retail, companies are going e-commerce. They're selling e-commerce. They close down their stores. They don't have any brick and mortars. They're all selling e-commerce. That's one of the biggest and most likely targets when it comes to sales tax. Technology companies. You sell products, you sell software as a service, you sell digital goods. They can have varying taxability across state lines. That's an easy thing for an auditor to go at. Oh, you sell software. What about the hardware? Did you tax this? How did you come up whether it's not taxable or not? That's one of the biggest things we see from a technology perspective as it relates to those types of industries. 18 states in 2019 were taxing software as a service. So you're selling a service, great. Oh, well, that's not taxable, Matt. Actually, it's taxable in a handful of states, almost half of the states across the country. And then also manufacturing and distribution. I'd say probably 4 or 5 times a week I get a call where we talk to a company and I say we don't have any sales tax issues. All of our customers are exempt. And I usually kind of take a step back and think about that for a second, because odds are they probably are registered in states for sales tax and potentially filing $0 tax returns. But here's what's the most important is as you're selling to exempt customers, a government entity, a university, just somebody that's a resale, they're reselling your product. You as the seller have to obtain those sales tax certificates to prove why you didn't charge somebody sales tax. It 80%, I think it was 82% of audits negative audits come from missing certificates, missing exemption certificates, missing documentation for why you didn't charge somebody sales tax. So that just lets you know how important it is, and it's one of the pieces of the compliance puzzle, which we'll talk about today, where you have to make sure you have all this information, you have all the documentation, and you can cover your you-know-what when you are going through an audit, heaven forbid. All right, so now we're going to walk through the 5 W's of sales tax automation. And this should just give you an idea of, kind of what you need to do, what you should be thinking about moving forward. So what is sales tax automation? What do we do? Avalara has integrations into over 1,000 different platforms. Now, our integrations mean we have a connector, which is an internal term here at Avalara, means we have a piece of software that can talk to your QuickBooks Online, your QuickBooks Enterprise, your WooCommerce, your Shopify. We have integrations to all of these platforms where we can calculate sales tax on your behalf. So somebody goes to checkout on your web store, you're using WooCommerce, you have Avalara's plugin. We look at, it's kind of like a decision tree. Am I collecting tax in this state? Yes or no? Is the customer taxable? Yes or no? Finally, are the line items or the items in the shopping cart taxable? Yes or no? We make all those determinations in under 0.2 of a second, and then we calculate the sales tax in the shopping cart while looking at each line item and determining if what you're selling is taxable. Now, I like to say we can help as much or as little as you need, to be very upfront with everybody on the call today. We can calculate the tax. We can file the sales tax returns, for which we file the returns, we remit the payments. If you get a tax notice, you forward that to Avalara. And then thirdly, we store, maintain, validate, and manage the life cycle of exemption certificates for your exempt customers. So if you have a bunch of exempt customers, let's say you have 5,000 customers and half of them are exempt, odds are you need to have 2,500 certificates on file. Most companies don't have them. They haven't got them before. Anytime you're selling to an exempt customer, even if it's a state you don't collect tax in, you should request that certificate in case you cross it at a later date. But we're a global sales tax automation company. Our software, everybody's using the same platform. So if you're a 3-person company in North Carolina or you're a 3,000-person company in New York City, you're all going to be using the same platform. And that's how we built our scalability for our services. Now, who needs sales tax automation? Short answer, almost every business. That's the sales guy in me coming out right there. But all sorts of industries. There's something that every business can benefit from Avalara in some form or fashion, right? So you're going to have to file sales tax returns. You're potentially going to have to calculate sales tax. If you're shipping products in multiple states, you're also going to have to track economic nexus. That's one of the number one things people need, is they need a way to track and monitor economic nexus so they know they're getting close to a threshold, therefore they can get registered. So almost every business can leverage us in some form or fashion. We do the registrations in addition to tax research. We can also address historical liabilities. If you should have been collecting tax in a state for 10 years and you didn't, we'll dive into that here in a few minutes. But almost everybody's going to need some form of sales tax help. And again, now is really the time to start that conversation. Now, thirdly, why? Why should I automate it? Because humans and people and teams at companies are spending hours and hours a week, a month, focusing on sales tax. And that's all they're doing. It just doesn't make sense, right? We have the software to automate it. And when you're using multiple people to focus on a task that doesn't generate any money, it's not a revenue generating activity, that's a problem. If I had 3 employees and they weren't focusing on a task that's going to make the company money, I would be going, why do I need to do that task? Who can automate this? Is there a technology? And that's controllers, CFOs, folks at that level at these companies. That's what they were spending their time thinking about and trying to figure out in 2020 is, what can I automate? What technologies can I use? And out of the box in Avalara, we have these technologies at our disposal to help automate this and help let you focus on revenue generating activities. You're on Technology Tuesday. It's September 21st. It's a Tuesday. Today's the day to just spend some time and thought of, what else can I automate for my company? Sales tax, just like payroll, is very similar. And again, everything else that the folks at Out of the Box do over with Jennifer and her team, I mean, they have amazing customer service, amazing support, amazing products, amazing things that they can automate for you. So I'm glad everybody's on the call today. The last stat, I have to point this out because I've talked about certificates a couple times. 43% of companies are using a filing cabinet or other hard copy to store their certificates. And that's okay in some form. But could you tell me which certificates are going to expire in 30, 60, or 90 days out? Can you tell me which ones need to get renewed? States like Florida and Washington D.C., the certificates expire every year, so you have to get new ones. That's one of those things that not a lot of people know as well. So I could go on forever, Jennifer, about why automate sales tax, but I'm going to keep going through the slides because I want to make sure when we get to the top of the hour we can answer some questions. So again, at a high level, accuracy. You have to calculate the proper amount of sales tax. You don't want to charge $5 and then tell that customer 6 days later when they already got their product that you need an extra $3 because you calculated the tax wrong. You don't want to have to do that. You also have to be thinking that there's 45 states plus DC that collect sales tax. If you're shipping up into those other states, you're going to have to get registered. Number 2, efficiency. So we just talked about this, the manual and the human effort that's spent for filing tax returns at the end of the month or looking up tax rates or trying to find out if something's taxable. It just doesn't make sense. Number 3, customer satisfaction. One of the number one things you want when somebody buys from you is to buy from you again. Tell their friends that they bought a product. Tell them that they bought this thing. You should go directly to their website. Repeat customers. Customer satisfaction is enormous when it comes to e-commerce and just when it comes to sales and orders directly. You want them to buy from you. You want them to have a good experience so they can go tell someone and word of mouth, and then you get that referral and somebody buys from you and you didn't even have to market to them. So customer satisfaction is very important. And then the final two, risk management and business growth. Think about where your company is going to go 3 to 5 years from now. If you take a step back and you just ask yourself that question, you should be immediately thinking, okay, what do I need to automate to get to that 3 to 5 year bar? Payroll, sales tax. I mean, there's a lot of other things out there, but those are the first two things that come to mind. If you outsource payroll, we have a very similar concept. You can outsource your sales tax components with us. Okay. Jennifer, we're almost halfway through. Are we doing okay time-wise? I just want to quick pulse check with you. I think we're doing okay.
Yeah, I think you're doing great. Thank you so much.
Okay, perfect. All right, so we'll finish up the W's here. When should you pursue automation? Kind of was just talking about this, but this is great. If your company is going to be potentially going public, if you're going to be acquired, if you're doing a merger, you're buying companies, there's never a bad time. The thing I will say is start the conversation. Start trying to figure out and make sure you're confident in what states you should be collecting tax in. Identify economic nexus. See where your company's going to be going. We have free consultations here at Avalara. We spend about 30 minutes with you. We'll uncover what states you have traditional nexus, economic nexus, and see how it makes sense and how we can help. But pursuing automation, honestly, and the answer is right now. Right now is where you have to be proactive and you need to be getting a grasp and also just doing a quick double check on, hey, are we collecting sales tax where we should be? I've seen and heard from a ton of companies where they messed up. They should have been collecting tax a while ago. They went through an audit, they failed it, and they had to write a check for, a couple $100,000. Well, with a solution like ours that can range anywhere from $2,000 to $3,000 up to 15 or 20, it's going to outweigh the cost of that audit tenfold. I can promise you that. So looking at some of these things, expansion, hiring new employees, updating a platform if you're going to go from QuickBooks Online to Enterprise, or if you're going to go from QuickBooks to NetSuite or what have you, now's the time to at least get a functional base understanding of what states you should be collecting tax in and also why you should be collecting tax there. All right, so why pursue automation now? Think about everything that happened in the past 2 years, and we've talked about a lot of this, so we've kind of already covered this, but now's the time to automate. States are changing rules, they're changing taxability, they're getting more aggressive. All that's going to do is make it that much more challenging for you to handle sales tax manually on your own. So do what you do best, outsource all the rest. I'll live by that saying for forever and ever. Okay, you have to be focusing on things that are going to generate revenue, and this is definitely not one of them. Now, let's talk about how you choose a solution. We have, I mentioned, the same platform for all companies, right? What's a good solution? Calculation, certificate management, timely returns, reporting capabilities. What's a great solution? Innovation and product delivery. Have the ability to grow your business when you add new products internationally. For our software, it's that simple. You have to get registered in 5 new states. You've already gotten Avalara set up. It's as simple as checking a box that says, hey, Avalara, I got registered in these 5 states. You guys help me do it. Start collecting tax on 10/1 in these 5 states. You literally check a box in your console, and then as of that start date, we will start collecting and filing and remitting sales tax moving forward. The other thing that's key is, where's your business going, right? If you do make a shift in your accounting software, your invoicing platform, your e-commerce strategy, you move from platform to platform. We have over 1,000 integrations. You can never outgrow Avalara. We are built on scalability. And the good thing about that is, then you don't have to look at other vendors. You don't have to use a tax provider and then switch a year later. Nobody wants to do that. I always talk to our folks. I'm like, when you get through that introductory call, you need to ask them, do you want to have the same conversation again? Because odds are we can probably cover everything you need, and we can definitely help you from beginning to end. So where to start? and I've touched on a couple of these things, right? Understanding where you have a physical presence nexus. So inventory, boots on the ground, offices. If you have 7 offices across the country, you need to check with whoever's in sales or quotes or the controller and say, hey, are we charging sales tax in these states? Are we registered for sales tax in these states? Do we have the proper licenses to conduct business in these states? So you have physical presence, economic nexus, you have click-through nexus, affiliate nexus. If you're drop shipping inventory from one state to the next, wherever that inventory is, even though you truly don't own it until it's sold, that can be a nexus creating activity. They call drop shipping the Bermuda Triangle of sales tax. I've never found a great way to put some sort of analogy out there for it, but it's just it's quite difficult to understand, and some states deem that drop shipping is a nexus building activity. So you have to keep that in mind. But where do you start? Let's get a grasp on what states I should be collecting tax in and why, and then where do I go from here, and how do I make it automated, and how do I get a path forward for compliance, even if I haven't been compliant historically. Now, as we get through this, I get a lot of questions on an annual basis with, how much does your service cost? How much does the software cost? What do I need to get started? And the good things are, we have a program here at Avalara called the SST. It's the Streamlined Sales Tax. Now, the SST program is a group of 24 member states that got together. They were founded in 1999. And Avalara is one of, I think, 3 CSPs, so certified service providers, where we offer free registrations, free calculations, and free returns filings in over half of the tax collecting states. Now, what does that mean? Because everybody, you hear the word free, and I'm always going to go, okay, it's too good to be true. What does that mean? So the SST governing board and Avalara have been together for a little over 11 years now. And the way you want to think about it is, if you have to get registered in any of the white states solely due to economic nexus, so you crossed $100,000 in North Carolina, you did 100 individual transactions in South Dakota. If you have to get registered in those states solely due to economic nexus, you can leverage and partner with Avalara, where you can get no-cost services in all of these states. And I'll walk through what that means here in a second. You have to be a volunteer remitter. And a volunteer remitter means you don't have any physical, you have zero inventory, you have less than $50,000 worth of payroll, and you haven't established a business location in those states in the last 30 days. So long as you're a volunteer remitter, we will get you registered at no cost, file the sales tax returns at no cost, and also calculate sales tax at no cost. So hypothetically, if we had a solution for your company and for the entire country, it was quoted at $5,000, and then you went in the SST program, you can assume that it's effectively going to cut your cost for our services and our fees roughly in half. Now, again, every state is different, every company is different, every business profile is different. But the SST program is a great program to be a part of. You sign up with Avalara. We work to get you registered and accepted into that program. It typically takes 45 to 60 days to get in and live on the program. It takes a little bit of time, but that timeline and that length will definitely be worth it when you're not having to pay for compliance services in any additional states. Now, we've talked about what we can do and how we can help. So on the front end, we mentioned the calculations. Avalara has integrations to over 1,000 platforms where we can calculate sales tax. We can calculate it at the invoice level, the quote, estimate, sales order, depending on your platform or your accounting system. We can calculate real time inside of the shopping cart. So imagine somebody goes to your website, they go to checkout, they put in North Carolina. What happens in real time is your shopping cart will reach out to Avalara and we'll go, okay, are you registered to collect tax in North Carolina? Yes, great. Then we look at that customer. Is the customer taxable or for some reason exempt? They are taxable. Then we look at those each individual line items in the shopping cart and we make the determination on whether or not they're taxable. Now keep in mind, every state's different from a sales tax rate rule boundary. We will take into consideration city, state, county, any special taxes that are applicable in real time. The call to our tax engine is in under 0.2 of a second, and it doesn't interrupt your process. We calculate tax, display it in the cart, we display it on the invoice, on the quote, on the sales order inside of QuickBooks in real time. So you just need to think of our calculation engine as overriding any native tax functionality that you have already. So that's on the front end. And then on the back end, the filing and the remittance, we can file the returns, remit the payments, we can answer any notices from the states or local jurisdictions that you get. If you get a notice from a state, you just forward that to our compliance team. Our compliance team is about 133 people strong, and that's all they do is file sales tax returns. It's a brutal job, but they seem very happy every time I see them in the office. So that's one of those things where we'll populate a liability worksheet from the 1st to the 5th of every month. You will then have from the 6th to the 10th to approve any of those numbers, make any adjustments, credits, refunds, what have you, and then we lock it on the 10th so that our team can go file and remit. Now, let's say cumulatively out of the course of your 5 states you're registered in for sales tax and their monthly filing returns. If you owed $7,000 in sales tax across all those states, we'll pull that $7,000 you owe from an account you designate via ACH from the 11th to the 15th every month, and then it's all automated moving forward. We file the returns, we send the payments in on your behalf. It's a very seamless automated solution. So that's calculations and returns, and then the documents. And please don't get confused by documents. Exemption certificates is kind of how we label it internally. So those documents that your customers should be providing you and or you should be requesting from your customers, we can store those certificates, manage them, validate them for their entire life cycle. Now, we have a lot of companies where they come to us and they're like, look, I got 12,000 customers, 6,000 of them I have certificates for. Great. Are you confident and do you believe those certificates are for the right reason, for the right state? And then usually it gets a little quiet. We have a team here that can do a managed services offering where we can send email campaigns to your customers. We can actually validate the certificates on your behalf. I had a company I worked with last week. They had 500 certificates. They had no clue if they were the right ones. So I think it's $1 a form where we will validate that certificate on your behalf. So we make sure it's the right form for the right state for the right reason. Because if you have a certificate that's not for the right reason, it's not going to hold up in a sales tax audit. And we talked earlier, 82% of negative audits come from these documents. Companies can't provide documentation, no pun intended, for why they didn't charge tax. It's a very important piece of the puzzle. Next, the registrations. So as you understand and get a grasp on what states you need to collect tax in, the first thing you have to do is you have to get registered. Avalara facilitates those registrations. It's $349 per state. We typically turn those around in 3 to 5 business days. And what happens in that time is you get a tax ID, so you can legally collect remit tax moving forward. You will get a filing frequency, monthly, quarterly, annually, semi-annually, and then you'll also get a form. Which form? The ST100, the NY104. You take that information, you populate that into our software, and then it's an automated solution moving forward. And then the filing, the payments as well. So we remit the payments to the states and local jurisdictions on your behalf. There's a few states out there that are really challenging for sales tax. That's Colorado, Louisiana, and Alabama. Those are what we call home rule states. They have local rules in addition to the state rules where you may have to get registered at the local level, file a sales tax return at the local level, remit sales tax at a local level if you have an employee in one of those parishes or in one of those municipalities in Colorado, in addition to filing a state return and remitting state tax. So if you're located in any of those states, we should probably have a conversation and at least make sure you understand what states you should be collecting and remitting tax in. And then insights. One of the really cool things is Avalara has acquired a handful of companies over the past year, and one of the ones that we have is TTR, Transaction Tax Research. It's effectively the Google of sales tax. So if you don't have a CPA, you don't have a tax attorney, you want to be notified when your product becomes taxable, like the Maryland example I get. You can go in and ask questions about your business. It's like an ongoing Nexus study, but it's a great tax research tool that we have at Avalara now. and it can be very, very beneficial for companies that are looking for, a true one-stop shop. All right, so going to cover here some additional things. Obviously, we have our resource hub on our webpage. We have the laws, state-by-state laws that are out there today from one state to the next. And one of the things for the Sales Tax Nexus that I think is really important, you want to, when you start to think about this and evaluate it, you want to start from work your way from the inside out. So where's the home office for the company? Number one. Where's the employees for the company? Where's the inventory if you sell a product? Ask yourself those three questions, and just look at the map. Like, okay, we're in North Carolina, my employees in Virginia, our inventory's in South Carolina. Great. We have a traditional Nexus sales tax obligation with Virginia, North Carolina, and South Carolina. First and foremost, number one. Then ask yourself, okay, where do we ship the majority of our products to? If we sell all of our products to the Pacific Northwest, then we need to monitor those states and see what the thresholds are and if we have to get registered there. You need to think about it like that, because the states where you have the highest amount of sales that historically you did not have to get registered in, now you do. And again, you don't just want to go get registered in some of these states, because a couple things are important. When you get registered in a state, they're going to ask you, when did you first conduct business, or when did you first establish a business? And under penalty of perjury, you have to be accurate with that statement. You have to say, hey, look, we started business on 9/21 because we just started out, or 10/1, or what have you. A lot of times the states will not let you backdate a registration more than 30 to 60 days. That's a red flag for them, because they believe you should have been collecting and remitting sales tax for quite some time. And then the second piece to that is, if you've had employees in those states and you haven't gotten registered and you should have been registered, you want to be thinking about a potential path forward. Do we need to address any liabilities from the past? Most states can look back anywhere from 4 to 7 years for historical liabilities. I had a company last week, they were doing $22 million a year. They had like 60 employees, and they're only registered for sales tax in Tennessee. Now, with everything we've learned on the webinar today, that tells me they are extremely out of compliance, and they should have been registered in probably 35 states, just solely based on their sales volume. So the second question you can ask yourself as we work our way outside in is, what's our annual revenue? If I'm a $10 million company, I know that I'm probably crossing economic nexus in 6 or 7 states. So that's one of the other things you need to think about is, what did we do last year from a revenue standpoint? And where are we registered? If you're only registered in one state, you're a multi-million-dollar company, odds are you have to get registered and should be registered in more states. Just keep that in mind. Industry insights, we covered a little bit about that today, but Avalara Commerce, we have a bunch of information about manufacturing, retail services. You can spend an afternoon on our website and you will learn almost everything you need to know about sales tax. A lot of context, a lot of great articles, a lot of great quotes, but we're here to help. And I mean this next thing when I say it, and I want to end on this, but there's a couple other things to talk about. But you have to view not just Avalara, but out-of-the-box technologies, Avalara, you need to view us as extensions of your business. We're both here to help. We're both here to automate things. We're both here to help you grow your business so you can focus on things that are going to generate revenue. So I just want to make that statement. View us as an extension to your business. We're here to help. And then again, we have a ton of stuff on our website about tax automation, how we can help. I'll tell you a little bit about the partnership per se. So Jamie's one of my colleagues here at Avalara. If you shoot Jamie an email and say, hey, I want to have a consultation, she'll get you either over to me personally or to one of our sales executives here. Now, what does that mean from the minute you say, hey, I want to have a conversation? So typically we schedule a 30-minute introductory call where we'll walk through and help uncover what states you should be collecting tax and really what you need help with, while also helping understanding economic nexus, covering where your company is going, and then also talking about integration points, because typically we're going to be integrated wherever you're invoicing somebody, wherever you're transacting with somebody that you need tax calculated. We work with almost every version of QuickBooks other than the Canadian version. We don't have a plugin for that. But if it's hosted by a third party, we have integrations and relationships with the hosting providers. So, first and foremost, evaluate what states you collect tax in. Potentially schedule a call with us here at Avalara, and we'll make sure you have a confidence and a understanding of which states you should collect tax in. And I get this question often, so I'm going to go ahead and address it again, Jennifer, because I know it usually comes up. So, hey, Matt, we need to get registered in these states. How often do I file? This is one of the most common questions I get, and I may have covered it earlier, but as you get registered or as you leverage Avalara to get you registered in these states, the states will determine your filing frequency, monthly, quarterly, annually, semi-annually, based on what your projected taxable sales are. Now, if you say your projected taxable sales are $100 and they make you an annually filer, great. But the minute you have a large month or you have a big quarter, the states reserve the right to change your filing frequency at any time. Now, it's really easy inside our platform. It's a drop down. You go, hey, I was quarterly, now I'm monthly. You can edit that inside of your Avalara profile. But that's really where everything stems from. The states determine your frequency as well as the forms. Part of using our software as well is you tell us what you sell. So we sell clothing and apparel. You take a list of your SKUs or your item master, if you will, inside of QuickBooks, and you map those items to our Avalara specific codes, and we make the determination on whether or not what you're selling is taxable or not. So we have a code for belt. We have 12 tax codes for belts. We have, I think, 390 codes for software, depending on how you define it. So that's really just where our software kind of starts, right? How can we help and how do you get it set up? So Jennifer, I'm going to pause there, take a sip of water real quick, and if there's any questions that have come in, feel free to shout them out, and I think I got one or two other things I'll cover here in a second.
Absolutely. Thank you, Matt. Yeah, definitely grab that drink of water. You've covered a lot of incredible information. And I just want to remind the audience today, if you have any questions, go ahead and put those in the chat. But a few things that were just coming to mind as you were giving some closing thoughts there, and they're kind of like cliche phrases, I guess, but you don't know what you don't know, right? And I feel like Avalara knows what we don't know about sales tax, because it is always changing. There's always something new, and there's no way that business owners can keep up with it all. And so having a partner like Avalara is so beneficial and necessary that, once I feel like even clients that we've had that use Avalara, once you get it going, it's like night and day. And so I just really think that that is really important. There's probably even more that you didn't cover today, Matt. I mean, I remember an example about Snickers bars being taxed here but not there because of ingredients. I mean, just so many little things that can greatly impact your business. And so I just really feel that this is an important area for businesses to really leave to the experts.
Yeah, and that's a great point. And the other thing is, so companies are also looking to expand and sell outside of, the domestic side. So they're looking to sell internationally. And now if you sell anything over like 100 pounds into the UK, you have to get registered, and then you also have to file quarterly returns. And then there's a import one-stop shop, IOS for short, where companies are having to get registered in the entire EU for sales tax for VAT purposes. We are a global organization. So whether you're in the US, obviously if you're in the US, but you're shipping products, right? If you're selling direct to consumer, if you're selling something tangible and you're shipping that product to a different country, you're going to have to worry about duties, tariffs, import fees and whatnot. We have all that covered here at Avalara. We have an office in Brighton. We have, I think, 375 folks over there, but we're a global organization, and we can help out with all of your indirect tax needs, and we're here to help.
Yeah, well, thanks for touching on that. That was actually a question that had come in, was the international presence. And Is that, beyond Avalara, or is that something that you can help with, is any sort of international involvement? So that's wonderful. Thank you for mentioning that.
Yep. Yeah, we do the registrations. We can get you the registration number ID in those countries. We can be your fiscal rep if that's required. We file the VAT returns. It really depends on how you're selling and who you're selling to. First and foremost, where are your customers? If they're in the U.S., great. And the U.S. only, you don't have to worry about international. If they're in different countries and you're selling tangible products, you potentially are liable for duties and tariffs. And then you have to make that decision on, do I display the duties and tariffs up front and they charge it? Or do they get a surprise bill when their delivery DDP, so it's due at the place? You need to be thinking about your customer experience. And if all of these things I just said is completely foreign, let's have a conversation and we can walk through it. Because, companies are looking to expand their channels and their avenues and where they can ship their products. So I'll leave it at that, Jennifer.
Excellent. One other question, and again, we'll leave it open for a couple more minutes for audience, is as rules and regulations change, if I'm already registered in a state, do I need to do anything on my end to update, to adhere to those rules, or does Avalara take care of it?
So if you're already registered in, let's just say, North Carolina, and if you're using our software, if they change a rule, a rate, a boundary, a tax percentage, the taxability of a product, if you're using Avalara and those changes happen to a state that you're registered in, we update it automatically. So we maintain rates, rules, boundaries, as well as product taxability, and we work with the states directly as we're monitoring all this. So if you're using us, you don't have to worry about anything. If you add a new state, it's as simple as checking a box. So hopefully that helps answer that one.
Perfect. Yeah, no, absolutely. Thank you. Okay, I think that's all the questions that have come in. So Matt, did you have any other closing comments before we wrap things up for the afternoon?
No, I think we're good. I really appreciate everyone. And again, it's Technology Tuesday. And, whether it's Avalara, out of the box, we want to help you. We want to help automate things. And, it's one of those things where it is time to really focus on the things that are gonna generate revenue for your company. And this is definitely one of them. So, don't wait 6 months to have a conversation. Let's have a conversation now and walk through where you should be collecting tax.
Absolutely. Thank you so much. Well, Matt, I really appreciate your time today. It's always a pleasure to have you on Technology Tuesday. You are probably the most knowledgeable person I know when it comes to sales tax, and I think that's just a small representation of your team over there at Avalara. So thank you so much. Everyone who joined us, again, I'll be following up with a recording of this session, so that if you need to revisit any of the topics that Matt went over, as well as some contact information for our friends at Avalara, so you can reach out and get those conversations scheduled, get your questions answered, and just get moving right along. So with that said, I would like to invite everyone to our next Technology Tuesday. We'll be off for a couple weeks and back on October 12th. Where we will be exploring what's new in QuickBooks 2022. So the new version of QuickBooks is being launched in October, and we are beta testing and exploring all the new features. And so we will have a really great presentation that will dive into what's new. So you can see that, understand if the new software is best for your business, and we'll also kind of just touch on the different versions. So making sure that everyone is in the correct version of QuickBooks as your business needs. So we hope that you can join us. And lastly, I'll just throw up a slide with our information here at Out of the Box Technology. If there's anything surrounding QuickBooks that we can help you with, we'd love to hear from you, get your feedback. And we appreciate you joining us today and hope to see you again soon. Matt, thank you so much. And I wish everyone a wonderful Tuesday.